Yes, students. Now we will revise chapter 7, which talks about cost accounting system. In this chapter, we'll be learning the ledgers and the journal entries which has to be passed under non-integrated in cost records. In cost records. Before we get into the ledger account journal entries and all, we will first learn some basic about this chapter, guys. Why this chapter? Guys, see, there are two system of maintaining the accounts. One is called integrated, the other one is called non-integrated. Under integrated, we will pass the entries in the same books for both costing transaction as well as financial transaction. That means we will maintain only one set of books. When I maintain only one set of books, there will be only one profit. There is no need to reconcile. There is only one profit. There is no need to reconcile it. Whereas under non-integrated system, I will maintain two separate set of books. One book is to record only financial transaction, which we call it as financial records. The other book is to record the costing transactions, which we call it as cost records. So as there are two set of books and both has different objectives, guys. In financial books, what we record is, sir, organization, how much profit they made as a whole. Means how much profit did the company make as a whole. Obviously, they would have made a profit from selling the product. Clear. Over and above that, if they have earned any other income also, like rent received, dividend received, interest received, they will account for it. In accounts, you would have done all this, no? Yes. Whereas in cost records, they will record only the income or profit which they have earned from manufacturing and selling the product. If there is any other income like rent, dividend, interest, will they record it in cost books? No. Same way, there are few expenses which we will book only in financial books, like share issue expenses, preliminary expenses, goodwill written off, or loss on sale of assets. All this we will record only in financial books, whereas we will not record it in cost books. So in cost books, we are concerned only about what? What is the profit or loss which I have made by manufacturing and selling the product? If anything else not relating to the product, I will not bother about it in my cost books. Whereas in my financial books, anything which company incur, they record it as an expenses. Anything which the company earn, they will record it as income. And they will calculate what is the profit as a whole we have made for a company. So due to this, there will be a difference between the costing profit and financial profit. So in that case, in the second stage, we need to reconcile them. Once we have prepared two separate set of books, that is financial book and cost books, it will give two different profits because of difference in treatment of few items. Majority of the transactions would be recorded. As for example, sales, purchases and all, will it be recorded in both the books? Yes. Clear? Yes. So as there is some differences between costing profit and financial profit, we need to reconcile it, which we will learn in the second part of this chapter. Clear? So reconciliation also is covered in this chapter. We will see it later. Clear? So our first focus would be on what? Sir, how do we prepare the ledger account? Or how do we pass the journal entries under non-integrated in cost books? So under non-integrated, there are two set of books now. What are those? Cost books, financial books. Sir, is financial books covered in our costing syllabus? No. Whatever you guys have learned in your accounts, that is financial books. We are not learning that in cost. So what are you teaching now, sir? Whatever entries you are supposed to pass under non-integrated in cost books. In cost books, guys. So we will see that now. So first what we are learning is non-integrated. As I already told you, I am repeating, we will maintain two separate set of books. One is the cost books to record what? Costing transaction. And another one is financial book to record what? Financial transaction. As we are maintaining two separate set of books, we will have two different profits. Should we reconcile it like how you do BRS? Same way you have to reconcile the costing profit and financial profit. Means first you need to find out why there is a difference. Okay, and try to adjust and tell, okay, this is how we can adjust it. Clear? Yes, sir. So guys, this is important. Many students find it difficult to analyze the ledger accounts or to pass the journal entries. I will try to make it as easy as possible. If you know, if you understand what each account stands for, what comes in, what goes out, or what is debited, what is credited, it becomes very easy, guys. And there is a sequence in which journal entries has to be passed. So please be careful. You have to be learning in the same sequence. Clear? And in the class, I will be teaching from A to Z everything. In the exam, everything may not come. If something doesn't come, we will skip that step. Correct? For example, we will learn lot of journal entries guys here. Almost everything I have given here. Clear? Sir, will they ask everything in the exam? No. Clear? Here, what all might come, I have given. So out of this, whatever you get in the exam, they will give you transaction. For that, you will be able to manage the journal entries. Clear? And if you understand journal entries, then ledger becomes easy. Or if ledger is easy for you, then journal entry around say you can manage. Correct? Now, because whatever journal entry we pass, we will post it to ledger. Clear? So first, I will try to explain each of these accounts, guys. Each of these accounts. Then we will go through journal entries, and later I will connect this to the cost sheet format. Okay, if you learn it along with cost sheet format, it becomes very easy, guys. I told you, we need to pass the journal entries in a sequence. That sequence is nothing but the cost sheet format. Yeah, which we already learned. Oh, let us begin with one by one. Along with the accounts, I will explain. So please be attentive. The main ledgers to be maintained under non-integrated accounting system in cost records are the following. What are those? One by one. First one, some special account we are maintaining. What is it, sir? General ledger adjustment account, or we also call it as cost ledger control account. Guys, see, for few accounts, there are alternate names. Sir, which name should I use in the exam? Whichever name they have used in the question, please use the same. Yeah, for example, even for stores ledger, we call it as material control account. Sir, which name should I use it in the exam, sir? Whichever they have given it in the question. Clear? For example, another factory, production, manufacturing, overhead, everything is one and the same. Should I use all the name? No. Use any one name which is given in the question. Clear? It is always good to know all the alternate names because when they give something new to you, it should not be shocking. Oh, your sir didn't teach us this accountant. Clear? Yes. Check. General ledger adjustment account. Guys, this account is a special account which is opened only to complete double entry system. Where, sir? In cost records. This doesn't have any much meaning. It is just open to complete double entry system. Okay, sir. And how does accounts looks like, sir? I will show it here. I will show it here. See, this account will open with the opening balance, but on the credit side and ends with the closing balance on the debit side. This is actually credit balance only. As we have credit side balance more, we would have written the balancing figure on which side, sir? Debit side. But if I ask you what balance is this? Credit balance. Clear? So it opens with the debit, credit balance and also ends with credit balance, but on the debit side. Sir, what is this balance stands for? Very simple. This opening balance is nothing but the opening stock of raw material, work in progress, and finished goods. See, raw material, work in progress, and finished goods is an asset for me. It will have debit balance. So in those respective account, it will show debit balance. But double entry system I have to complete now. So in order to complete double entry system, I will show the opening balance in this account on the opposite side. On the opposite side. If you see stores ledger, it will be having debit balance, which is an asset, raw material. Then even the WAP control, it will be having debit balance. Then even finished goods control account will be having debit balance. Why is that? Guys, inventory is an asset for me. It will have what balance? Debit balance. But in order to complete double entry system, all these opening balances, I will show it on the credit side of where? General ledger adjustment account. Okay, sir. And at the end, this account will also have a closing balance, which is nothing but the closing balances of various accounts. Okay, sir. Then any expenses incurred, guys, any expenses incurred will be recorded on the credit side here. Simple. Why, sir? Reason being simple, guys. See, in cost records, we will not use the name of cash account, bank account, creditors account, debtors account. Cash, bank, creditors, debtors, we will not use in cost records. Wherever I am supposed to use these four names, in place of them, I will use general ledger adjustment account. Sir, what is the reason? Guys, simple. Even in my financial records, I would have maintained cash, bank, creditors, debtors, where I will be recording the transactions frequently. Here also, if I maintain, then it will confuse the users. Clear? So that is why we are not using their names. Instead of that, we are bringing what? General ledger adjustment account. Now you guys are punters in the journal entries in accounts, correct? So in accounts, you know, when and all you will use cash, bank, debtor, creditors. Now here, in place of that, what should you use? General ledger adjustment. Now anything you purchase, any expenses you incur, what is the entry, guys? Something debit. Expenses are overhead to what? Cash or bank? But here you have to do two general ledger. Clear? So we will record it here. Same way, at the end of the year, we will make sales. When I make the sales, what is the entry in your accounts? Data, if it is a credit sales or if it is a cash sales, cash or bank, two sales. But here, in place of them, what should I bring, sir? General ledger. Whether it is cash sales or credit sales, doesn't matter. General ledger to sales, same entry. Whether it is cash sales or credit sales. Hope you understood. Hope you understood. Normally, this will be the balancing figure or else maybe this. Whatever would be the final profit in my costing P&L also, we need to transfer it. It will be either net profit or if it is a net loss, it will come here. Costing P&L account, we have not yet discussed, we will do it. Clear? Yes, sir. So this is the first account and very important account. And when you are closing the accounts, try to close this account at the end. The last account you have to close is this account. General ledger adjustment account in the order. Okay, sir. Next. Next. Stores ledger control account. Guys, stores ledger control account is nothing but my raw material. Whatever raw material I will purchase and use it in the production process or issue it, I will record it in this list. In your accounts, you will record it as purchase, right? But here we will not use the name purchase. Instead of that, what do we use? Stores ledger. Guys, stores ledger is nothing but raw material account. There is nothing but raw material account. Okay, sir. Raw material is an asset for you now. Hello. Raw material is an asset for you. Yes. It will have what balance? Opening balance debit. Debit. Opening stock of raw material. And when you purchase, what is the entry you will pass? Stores ledger to general ledger. Sir, what if it is cash purchase, credit purchase? Doesn't matter here. Doesn't matter. Same entry for both. They will confuse you sometime in the question by giving credit to cash and all. You don't care about it in cost to cost. Same entry. Because if it is cash also same. If it is creditors also, same thing has to be credited. Correct? Yes. Then once I purchase, guys, once I purchase, what should I do? If I'm issuing direct material for production, I have to send it to WAP control account. WAP control account. And if it is indirect material, I have to send it to factory overhead control account. Or if they have only told it has been transferred to administrative overhead, selling and distribution and all, transfer it to respective. If they are simply given indirect material, transfer it to factory overhead. Factory overhead, production overhead, manufacturing overhead, work overhead, everything one name the same. Clear? Yes, sir. I'm using one name, that is factory here. Got it? At the end, this account will have a closing balance. This account will have a closing balance. What is it, sir? Closing stock of raw material. Clear? Normally, this will be the balancing figure, guys. If by chance, if this is already given in the account, try to tally that. If this is already given in the question, try to tally the account. If it is matching, very good. If it is not matching, then it will be either abnormal loss or abnormal gain. If debit side is more, then you have to be writing here abnormal loss. Where do you transfer it to? Costing P&L account. Sir, what if credit side is more? Then debit side you have to write. What is it? Abnormal gain. Where do you transfer it to? Costing P&L account. And please be careful. This is only when there is a balance in store structure. Clear? Sir, if closing balance is not given in the question, then definitely that will be the balancing figure. They have given closing balance, but still account is not matching. Then what is the balancing figure? Abnormal loss or abnormal gain, which might be hidden information. They would have not given it directly in the question. You need to pick it up as clear. Yes, very simple, very easy. Stores ledger is an asset, guys. Correct. Inventory is an asset for me. Debit what comes in, credit what goes out. When you purchase, debit it. When you issue, you credit it. Issue means it's going out, right? Yes. Okay, fine. We are done with this source ledger. Next, wages control account. Wages to salary, everything is one and the same. Here, there is no separate account for salary and all. Clear? Wages will not have any opening balance. Normally, it will not have any opening balance. When you incur or pay wages, what is the entry? Wages control to general ledger. Debit it. Debit any expenses. This is expenses, guys. Debit any expenses on loss. Correct a nominal rule. Yes, sir. We have debited. Once I have debited, if it is direct wages, I will send it to WAP control account. If it is indirect wages, I will send it to factory overhead. Or if they have given in the question that indirect wages has to be transferred to administration, selling and distribution and all, send it to the respective account. If nothing is given, please transfer it to factory overhead. Got it? So only these three entries will come. If account is matching, close it. Close it. Sir, what if by chance it is not matching? Then normally debit side will have more balance. So on the credit side, we will write it as what? Wages paid for abnormal idle time. Wages paid for abnormal idle time. That would be the balancing figure. If at all, if the account has a closing balance tax. If at all, if it has. Clear. Majority of the time, what I have observed is it will match, it will tally, close the game. If by chance, if debit side is more, then on the credit side, what do you write it as? The wages paid for abnormal idle time. Where do you transfer it to, guys? Costing P&L account. Costing, so it will be by costing profit and loss account. Hope you got it. Yes. One more account closed. One more account closed, sir. First one. Sir. Next, factory or production overhead control account. And for this, there are alternate names, guys. You guys please use the name. What is given in the question? Yes. See, for any overhead account, guys, for any overhead account, overhead incurred would be debited, overhead absorbed would be credited. Overhead incurred would be debited and absorbed would be credited. Listen here. Sir, when we have incurred, the amount is going out, that is cash or bank. In place of cash or bank, what should we use? General ledger adjustment. Clear? And when we are observing, where should we send it to, sir? Next account. Whichever is the next account. Clear? The accounts will follow the sequence. Clear? Yes. Now, first, what do we record in factory overhead, sir? If you have received any indirect material or indirect wages, which is transferred here, no? It was transferred here, indirect material or indirect wages. Receive it, no? Because you know every transaction will have opposite effect. So whatever is transferred there, receive it. Debit what comes in? Clear? Yes, sir. Over and above that, if you are incurring any factory overhead, any indirect expenses incurred in the factory, record it. What is the entry, sir? Factory to general ledger adjustment account. Okay, sir. Now on the debit side, what is there? Factory overhead incurred total. Now on the credit side, observe it. On the credit side, observe it. Sir, who will observe it, sir? WAP account. Which is the next account? WAP account. So factory observed, factory overhead observed should go to which account? WAP control account. And if there is any difference between overhead incurred and overhead observed, where should it go, sir? Costing P&L account. Costing P&L account. If there is any difference between incurred and observed, that balance we call it as either under absorption or over absorption. Where should it go, sir? To costing P&L. Clear? Yes. For example, assume guys overhead incurred is 1 lakh, whereas observed is 80,000. Observed is 80,000. Under absorption. So 20,000 under absorption has to go to where? Costing P&L. Costing P&L account. We call it as under absorption. Sir, what if it is vice versa? For example, assume observed is 2 lakh, but incurred is 1.7 lakh. Incurred is 1.7 lakh, we have observed more. So that means there is a over absorption of 30,000. Where it will go, sir? To costing P&L. So here we need to pass to costing P&L account. Hope you are understanding. Debit side stands for what? Incurred. Credit side stands for what? Observed. If it is matching, very good. If it is not matching, the difference is what, guys? Under absorption or over absorption. Where do you transfer it to? Costing P&L account. Clear? There is an alternate treatment for this, which I will cover later. First, let me finish it. Hope you understood. This account done, sir. Next, WAP control account. Guys, very important. This is where manufacturing happens. This is where manufacturing happens. So all the direct material, direct labor, and factory overhead observed is coming here. Yes, sir. Receive it. No. Papa, they all sent it. You receive it. Clear. WAP control account will always start with opening balance, guys. It is an asset. So any asset will have what balance? Debit balance. And it will end with closing balance. And anything they receive from various departments, debit what comes in. Debit what comes in. Store ledger control account, wages control account, which is nothing but direct material and direct wages, and also factory overhead observed. Here, what is transferred? Receive it. No. Receive it here. Okay, sir. And listen here. If there is any other direct expenses, royalty paid, excise duty paid, or rent paid for machinery to be used for each and every unit to be produced, clear, the other direct expenses. If at all, if they have given in the question, straight away record it here. Don't maintain a separate account for it. Straight away record it in WAP control account. Straight away record it. Got it up? Yes. Now, once they have given all this, guys, product is ready now. Product is manufactured. Where should I transfer it to? Finished goods control account. Product is manufactured. I need to send it to finished goods control account. And the name of that amount is called what? COP, cost of production, or cost of goods manufactured. And sir, in this account, which will be the balancing figure? Normally, this would be the balancing figure, guys. If by chance, if they have given this in the question, then this might be a balancing figure. Clear? Hope you understood. So once I take all this, deduct this, what do you get? Cost of production. Transfer it to which accounts? Finished goods control. Finished goods control account. Okay, sir. Next is administrative overhead control account. And guys, for this chapter, administrative overhead will always be considered as general. Will always be considered as general. That means it will come after cost of production. It will come after cost of production. In cost sheet, we have encountered that in two places. If it is related to production, it will come before cost of production. If it is general, it will come after cost of production. But here, it will come after the cost of production, guys. So, what is it, guys? See, any overhead account, same story. But only what is observed, it will go to the next account. Clear? So, we will see that administrative overhead control account. Guys, if at all, if you have received any indirect material, indirect wages and all, record it here. Clear? Yes. Over and above that, if you have incurred any administrative overhead control account, what is the entry? Administrative overhead to general ledger. Record it. Then whatever overhead you observe, that is administration, send it to which account? Finished goods control account, which is the next account. Send it to next account. Clear? Sir, if debit and credit is matching, no problem. If it is not matching, then either under or over. Where do you transfer it to? Costing P&L account. Hope you got it. Yes, sir. Next, finished goods control account. Again, an asset. It is an inventory, right? Yes. It will have what balance, sir? Debit balance. So it will start with opening balance and end with closing balance. Clear? All these three accounts normally will have debit and means debit balance, which is opening. At the end, you show it as closing stock. It is also debit balance only. But just to tally the account, I will show it on the credit side. Hope you guys are aware of all this. See, just because you are showing the closing balance on the credit side doesn't mean that it is having credit balance. It is actually having more debit. I cannot write it on the debit side. To tally the account, I would be writing it on credit side. So if I ask you which balance is this, credit balance or debit balance? Debit balance. Okay, sir. So finished goods control account. Now it is an asset, so it will start with opening balance and ends with closing balance. Then whatever cost of production is transferred here, receive it, receive it, receive it. Cost of production plus opening stock of finished goods minus closing stock of finished goods plus administrative overhead observed will give us what? Cost of goods sold. Will give us cost of goods sold. I repeat, we have received cost of production from WAP plus opening stock of finished goods minus closing stock of finished goods. If it is on the credit side, minus only, na? Yes. Plus administrative overhead observed will give us cost of goods sold. We will call this amount as cost of goods sold. Where are we transferring, sir? To cost of sales. Sir, can I maintain a separate cost of goods sold account also? Yes, you can maintain, but I don't suggest. Better transfer it to cost of sales account. Transfer it to cost of sales account. You are transferring it to cost of sales account, but amount is not called cost of sales. Amount is called what? COGS. Cost of goods sold. Hope you got it. Clear? Yes. Fine. So we covered this. Next is selling and distribution overhead. Same. Overhead means the same story. Incurred debit to observed credit to. Which is the next account after selling and distribution? Cost of sales. So, cost of sales has to observe the selling and distribution overhead observations. Clear? Now, I repeat, listen here. Even in selling and distribution overhead, if by chance, if they have received any indirect material or indirect wages, record it. Clear? It will be like two stores ledger, two wages control account. Clear? And if they have incurred any selling and distribution overhead account, what is that? Overhead, what is the entry, guys? Selling and distribution overhead control to general ledger adjustment account. Then once you have incurred, it is on the debit side. Now observed. Now observed. So selling and distribution overhead observed, we should go to which account, sir? Cost of sales. Now cost of sales will receive two things. One is cost of goods sold, which they receive from where? Finished goods control. Plus selling and distribution overhead observed. Now can I call both this put together cost of sales? Hello? COGS plus selling and distribution. What is it? Cost of sales. They are transferring it to sales account. Transferring it to sales account. Now, in sales account, receive the cost of sales. Record the sales on the credit side. What is the entry for sales? General ledger to sales. Whether it is cash sales or credit sales, no difference. Record. Record. Once you do this, if there is net a gross profit or gross loss, transfer it to costing P&L account. Costing P&L account. Hope you got it. Clear? Yes, sir. Now in costing P&L account, if there is gross profit which we have transferred, we will receive it here. Clear? Sir, what if it is a gross loss? You would have recorded it here and transfer it on the debit side. That's all. Clear? Yes, sir. Next, see, actually gross profit means sales minus COGS. Clear? But in cost accounting system, we will get two profits, guys. One is year, the other one is year. Just to differentiate them, I am using the name gross profit, net profit. Clear? Yes. Or else you can simply write profit also. No problem. But we will get one more profit here, which we will transfer to general ledger adjustment account. Just to differentiate between them, I am naming it as GP, NP. Clear? Yes. Now in costing P&L account, first thing you record whatever gross profit we have received from sales account. Clear? Next, if there is any under absorption or over absorption in the overhead account, we transferred it to costing P&L, receive it. If it is under absorption, record it on the debit side. If it is over absorption, record it on the credit side. Same way, if there is abnormal loss or abnormal gain in the stores ledger, if it is abnormal loss, record it here. If it is abnormal gain, record it here. Same way, in wages control account, I told you, if there is any difference, what is it? Wages paid for abnormal idle time, record it on the debit side. The final profit, you have to transfer it to general ledger adjustment account. Clear? So, whatever final profit or final loss, transfer it to general ledger adjustment account. And only after this, I can close general ledger adjustment account. Clear? I told you, you need to close that account at the end. Please close the general ledger at the end, guys. Rest all you can close it in the order. Whereas general ledger, please close it at the end. Hope you got it. Alternatively, I will tell you. See, I have shown you your sales account, cost of sales account and all. But sometimes what they do is they don't maintain this accounts and all. So straight away, assume selling and distribution also is not there. You can exclude it. Straight away, you may transfer this amount to costing P&L account and there only you record sales. There only you record sales. Or else, another alternative. Sir, no sir, I will transfer this to cost of sales, sir. But from cost of sales, I will not transfer it to sales account, sir. I will transfer it to costing P&L. Clear? So from cost of sales, you will transfer to costing P&L account. It will come on the debit side. On the credit side, record sales. That is why general ledger will come. This is the alternate treatment I am telling you. Clear? Yes. In that case, no need to prepare sales. I hope you understood. I repeat, cost of sales, instead of transferring it to sales account and recording sales here, we will completely eliminate sales account and transfer cost of sales to which account? P&L account. It will come on the debit side here and record the sales here by general ledger. Ultimately, we will get profit here. Only one profit you will get, that profit you transfer it to general ledger adjustment account. Clear? Yes. So if there is no item given in the question, for example, administration only they have not given. So please eliminate that account. That's all. Don't prepare that account. Got it? Everything we have taken care. Now, guys, see, in overhead control accounts, I told you, if there is under absorption or over absorption, you need to transfer it to costing P&L account. But sometimes there will be an alternate treatment. Sometimes there will be an alternate treatment. What are those? Guys, simple. Listen now. In the question, if they have given the opening balances for overhead accounts, then at the end, you need to keep closing balances. Clear? I repeat. In the question, they have given the opening balances for overheads account. Opening balance of overhead account, sir. Yes, which is nothing but under absorption or over absorption. That means in the last year, they didn't transfer whatever is the under absorption or over absorption. They didn't transfer it to costing P&L account. They kept it as closing balance. Now what do? You also keep it as closing balance. At the end, if you have under absorption or over absorption, do you transfer it to costing P&L account? No. Please follow consistency. Last year, what they have done? They have kept it as closing balance. You have brought that as opening balance for the current period. You also keep it as the closing balance at the end. Got it? Yes. I will give an example. Listen. This is any overhead control account. In 2025, incurred was 1 lakh and observed was 120. Incurred was 1 lakh and observed was 120. So observed is more. So the credit balance 20,000 more is there. So on the debit side, we will write 20,000 balance carry. Means they are not transferring to costing P&L. So company is following a policy of keeping the closing balance of overheads, whether it is under or over. Guys, what is this balance? Over absorption. Over absorption means which side more? Credit side. So in the next year, we will start with what? 20,000 credit balance. What is that, guys? Over absorption. Over absorption will have credit balance. Hope you understood. Why, sir? Last year, which side was more, guys? Credit side. Clear? Okay. 2026, we started with opening balance on the credit side. In the current year, we incurred 250 overhead expenses and 220 observed. So which side is more? 250, 240. Debit side 10,000 is more. Correct? How do I balance it? I will write it on the credit side. But this account is having what balance? Debit balance. Clear? Guys, incurred 250. Observed, including this, total is how much? 240. So there is a debit balance of how much? 10,000. What is it, sir? Under absorption. Am I transferring it to costing P&L account? No. Why, sir? Because they gave opening balance. So what should I do? Write it as closing balance. What is that? Under absorption. Which balance is showing it? Which is that balance? Debit balance. So next year, 2027, we will start with what? Debit balance. Debit balance 10,000. Got it? Yes. So in 2027, we are opening with 10,000 debit balance. Assume we have incurred 3 lakh and observed 340. So 310, 340, 30,000 difference. Which side more, sir? Credit side. So we will write it on the debit side just to tally. But this account is having what balance? Credit balance. So what do we call it as? Over absorption. Next year, we will start with what balance? Credit balance. Hope you understood the logic. In simple, guys. In the question, if they have given opening balances of overheads account, either debit or credit, please be careful. Debit means under, credit means over. Clear opening balances. At the end, you please don't transfer it to costing P&L account. You also keep it as the closing balance. And if at all, if they have asked you to prepare trial balance, take it there also. Clear. And when they ask you to prepare ledger accounts, chances are there that they may also ask you to prepare trial balance. Clear. Sometimes they ask you only ledger accounts, sometimes ledger accounts with the trial balance. In that case, obviously the marks weightage will be more, guys. Hope you understand. Clear? Yes. Okay. Now I explained each of the accounts. Okay. So whatever I explained, debit side, credit side, those are the journal entries. So I told you if you understand conceptually, then it will not become tough for you guys because there are too many journal entries. Clear? If you try to mug up the journal entry, then you will tend to forget it or you tend to get confused. Okay. We will go through quickly. Sir, for material purchase, whether it is direct material or indirect material, entry is one for purchase. What is it? Stores ledger to general ledger. And for issuing it, if it is direct material, where should it go? Where is the production happening? WAP. Production is happening in WAP. So WAP. And if it is indirect, then it should go to the respective overhead. There is nothing called respective overhead. Okay, there are 3 overheads. Now, instead of using all the names, I have given respective overhead. If question is silent, please send it to factory overhead. Factory overhead. And if question only is telling so much indirect material is transferred to administration, selling and distribution and all, accordingly distributed. To store ledger. Very simple. Debit what comes in when we purchase and when we are issuing, it is going out. Credit. What goes out? Okay. Now, if there is any material purchased directly for a specific job, straight away, instead of receiving and sending to WAP, straight away record it in WAP. So WAP to general ledger. Then, if there is any materials returned to vendor, which is purchase returns, Purchase returns. When you purchase, what is the entry you pass people? Store, general ledger. Just reverse. Just reverse it. Because what came in? Again going out. Again going out. Just reverse it. Then, sir, what if materials are returned to store? Means the production department is giving back to store. Who is taking care of production here? WAP. So come back. So whatever I issued here is coming back. So pass a reverse entry. Pass a reverse entry. Or even if sell administration department or selling and distribution department, we had issued an indirect material to them, they are giving it back. Record it as returns. Clear? So whatever entry you have passed for issue here, you have to reverse. Clear? Debit stores ledger and credit whoever is giving that. Okay. Then wages or salary incurred, whether it is direct wages or indirect wages, entry for incurred is same. What is it, sir? Wages to general ledger. And direct wages we have to transfer to WAP control account and indirect to respective overhead. If question is sent, where do you send it to? Factory overhead. Then, if by chance if wages account is having any closing balance tax which is not getting tallied, then we call it as what? Wages paid for abnormal ideal time. Normally, this would be the balancing figure. If at all, if it is there. If at all, if it is there. Okay, what is the entry? Costing P&L to wages control account. Then production overhead incurred. For any overhead incurred, dialog is same. Overhead to general ledger. Okay, but use the name. Okay, factory or production or manufacturing overhead to general ledger. And observe, guys, which is the next account after production overhead or factory overhead? WAP. So production overhead observed will go to which account? WAP control account. Debit the receiver, credit the giver. Who is the receiver? WAP. Okay. Then for finished goods transferred, where is the manufacturing happening? WIP control account. So when product is ready, manufactured, we are sending it to finished goods control account. Again, debit the receiver, credit the giver. Who is receiving it? Finished goods. Who is giving it? WIP, credit it. Then for administrative overhead incurred means overhead account debit to general ledger. And observe, which is the next account, guys? Finished goods. Who will observe it? Finished goods. So debit the receiver, credit the giver. Finished goods control account to finished goods control account to administrative overhead control account. Then for cost of goods sold. Now in cost of sales, sir, in finished goods control account, what balance is there? That is nothing but COGS. The amount is called COGS, but we are transferring it to which account? Cost of sales. Sir, is there a need to prepare COGS account? I don't suggest it, guys. Even if you prepare, answer will remain same, but one extra step you are doing, one extra account. Yeah, so straight away transfer it to cost of sales account. Okay. Then selling and distribution already incurred. Selling and distribution to general ledger. Then who is observing it? Cost of sales. So debit the receiver, credit the giver. Cost of sales to selling and distribution. Yes, sir. Then cost of sales transferred. Where are we transferring it to, sir? Sales. So sales to cost of sales. I told you alternatively we can transfer straight away to costing P&L also. Clear? Yes. But here I am following the sequence where I am opening even sales account. So sales to cost of sales. So in sales account, we will record the sales, whether it is cash sales or credit sales. Better mention there. Credit or cash. Entry is same. Entry is same. What are the entries of? General ledger to sales account. Sorry, where is it? Sales made. You better mention in the bracket cash or credit. What is the entries are? General ledger to sales. Clear. And even if it is for purchases, guys, whether it is cash purchase or credit purchase, entry is same. Entry is same. Okay, sir. Next, sales return. Just reverse this thing. Just reverse this entry. Next, guys, all this whatever I have given in red, green color, no, either of the entries will come, not both. Clear. I have given the entry for gross profit, gross loss. Under absorption, over absorption. Sir, will both come simultaneously? No, any one. So that green signifies any one. Oh. So if there is gross profit or gross loss in sales account, where do we transfer it to? Costing P&L. Or sir, what if I record straight away sales in costing P&L account only? Then you will have only one profit. That profit you will transfer to general ledger adjustment account. Clear? Same way, guys. Whenever there is under absorption or over absorption, you will transfer it to costing P&L account, provided there was no opening balance given. If there is opening balance given in the question, I told you what to do. Clear? And please be careful. I have given the entry for both here. For one overhead account, either of the two you will have, either under or over absorption, but not both. Clear? But for one overhead you might have under, for another overhead you might have over, because there are totally three overheads. Okay. So if there is abnormal loss or abnormal gain of materials, that is in stores ledger account, where do we transfer it to? Costing P&L. Then at the end, in costing P&L account, whatever profit is there or loss is there, where do we transfer it to, sir? General ledger adjustment accounts. Is that clear? Yes. So we're done with the journal entries discussion. Even ledger. Okay, journal entry along with ledger, we have done. Clear? Yes. So whatever we discussed till now, guys, was under non-integrated accounting system in which books? Cost books. Sir, you didn't teach us financial books. It is not a part of your costing syllabus. You need not worry. Whatever you learn in your accounts is financial books. Clear? Yes. Now we have one more system. What is it, sir? Integrated accounting system. Guys, integrated is chiller. Why, sir? We are already master in non-integrated. If you are master in non-integrated, then integrated is very easy, guys. Why is it? I will compare and tell. See, integrated means we are maintaining one set of books to record both the transaction. That is costing transaction as well as financial transaction. That means we have only one profit. Yes, no need to reconcile. No need to reconcile. Now, in non-integrated in cost books, we maintain one extra account just to complete double entry system. Now, which was that account? General ledger adjustment account. Now eliminate it. Now please eliminate it. In place of that, whatever used to be used now, that will come. That is cash, bank, creditors, debtors will come into picture. Clear? There is no general ledger adjustment account under integrated accounting system. It is replaced by cash, bank, debtors or creditors. That is the respective accounts. Okay, sir. So I have just given few examples here. Yeah. As we already understood non-integrated, guys. Now integrated becomes very easy. Wherever we used to use general ledger, wherever we used to use general ledger, in place of that, we have to bring cash, bank, debtor, creditors. For example, assume raw material purchase for cash. What is the entry? Stores ledger to cash account. Purchase for credit. What is the entry? Stores ledger to creditors. Under integrated, I am talking about. Don't change there. Hello. Don't change the journal entries. Okay. I am telling under integrated. Next, for any overhead incurred, guys. For example, where is overhead? What was the entry under non-integrated? Overhead to general ledger. But now, cash or bank. Even for wages incurred, what is the entry, sir? Wages to general ledger under non-integrated. But now, cash or bank. Clear. Let us come to sales also. Where is sales? Where are you? Here. Okay. Under non-integrated, what was the entry? General ledger to sales. Whether it is cash or credit sales. But under integrated, if it is cash sales, cash or bank to sales account. Sir, what if it is credit sales? Debtors to sales. Hope you understand. Clear? Yes. Same to same copy pasted, but in place of general ledger, we need to bring respective accounts. That's all. Rest all remains same, guys. Rest all copy paste. I've just given few examples here. Guys, the under non-integrated, we have two books, financial records, cost records. Under integrated, only one book. How do we pass the entries in each of these books? For the same transaction, we will see. For material purchased in financial books, in your accounts, financial records is nothing but your accounts. I didn't teach you this. Correct? Yes. Accounts faculty would have taken care. Yes, sir. Now, what is the entry for it? Purchases to bank or if it is credit, creditors. Coming to cost records, what is the entry? Stores ledger to general ledger. Whether it is cash purchase, credit purchase, doesn't matter. We just now learned. Whereas under integrated, in place of this, we will bring whatever we used to use in accounts. That is, if it is cash purchase to bank, if it is credit purchase to creditors. Hope you got it. Same way. For wages paid or salaries paid in financial records, what is the entry? Wages to cash or bank. Clear? And to the extent possible, if you are making immediate payment, use bank only, guys. Because nowadays cash transactions are not entertained. Even in income tax, you would have seen cash payment more than 10,000. If you have made to a single person in a single day, it is zero. You cannot claim anything. Clear? Whether it is revenue expenditure or capital expenditure. Now, if it is a capital expenditure, if you have paid more than 10,000 in a day to a single person to purchase an asset, it is as if you have not incurred any cost. What is the cost of asset to be added to the block? 0. That means you cannot claim depreciation. Sir, what if it is a revenue expenditure? Then section 48. Which section? Tell me. Which section which will disallow the cash expenditure in income tax under the HGBP? 40A3. If cash payment is made to a single person in a single day, more than 10,000, then it is completely dissolved. Not only the excess, entire amount is dissolved. Clear? So that is why most of the transactions will happen through bank tax. Will happen through bank. There are lot many things also, provisions covered in income tax especially. Clear? You cannot pay in cash, you cannot receive in cash. If you do so, then here and there, they are also trying to penalize. They are trying to curb the cash transactions. Clear? Because when you do the transaction through banking channel, even they will have a eye on you. Eye on you means what you are receiving, what you are paying. Because your bank account is linked to Aadhaar and PAN. And PAN is the unique number for income tax purpose. Anything you receive, anything you pay through your bank account, everything income tax department is getting to know. Okay, don't worry, your WhatsApp message and all they will not get to know. Okay, only what comes in and what goes out through your bank account. So, huh? Sure. Next, wages paid. What is the entry in financial books? Wages to cash or bank. Whereas in cost records, wages control to general ledger. Whereas now in integrated, what is the entry, sir? In place of general ledger, I will bring back cash or bank. Then sales made in our financial books, what is the entry? If it is cash sales, bank to sales. If it is credit, debtors to sales. Whereas cost records, cash or credit, only one entry, sir. General ledger to sales. Then coming to integrated, if it is cash sales, bank to sales. If it is credit sales, debtors to sales. Clear? Yes. Guys, I have given all three. This is anyway not a part of your syllabus, but I have just given you so that you can compare and easily understand. Yeah, what is the difference between each of the books? Last one, any overhead incurred, any expenses incurred. In financial books, what is the entry? Expenses or overhead. Actually, in financial books and all, we don't use the word overheads. Yeah, we just use the word expense. So that is why I use the word expense. Expenses to cash or bank. Whereas in cost records, overhead control, that is the respective overhead, control to general ledger. Whereas when it comes to integrated, we will remove this. Overhead control to cash or bank. Clear. I have just given overhead control here, guys. It will have a name like factory, administration, selling and distribution. You need to use the respective name. Got it? Huh? Integrated done now? Yes. Guys, only one thing. See, if you thoroughly study non-integrated, then integrated becomes very easy. Just be careful. See, whenever you are passing the entries under integrated, try to connect to non-integrated. Okay, that is what we will pass. But instead of general ledger, let me use this. Let me use this. This means what? Cash, bank, creditors, debtors. Sure. Fine. We are done with the first part of this chapter. Now coming to reconciliation. Sir, when will reconciliation come? Only when the company is following non-integrated accounting system. Non-integrated means, sir, is it integrated? No. Both the transactions are not integrated. Whereas in integrated, I will maintain one books by integrating both. Oh. Under non-integrated accounting system, I will maintain two separate set of books. One book is for recording financial transaction. Another book is for recording costing transaction. So that means we will have two profits. Why, sir? Because the objective of cost records and financial records is different. In cost records, what is my objective? To record the profit or loss which I have made by manufacturing and selling my product, assuming I am a manufacturer. Yeah. If any expenses or income is there which is not related to product, will I record it in my cost books? No. For example, rent received, dividend received, interest received, or expenses like loss on issue of debentures, preliminary expenses, goodwill written off, or loss on sale of assets. Will I record them? Or income tax paid, donations given, subscriptions given. Will we record it in cost books? No, sir. Got it? Then coming to the financial books. In financial books, what is my objective? To calculate the profit or loss of the company as a whole. How much profit the company made in a year, in which they will consider all the income earned. The major income is from the sale of product only. But in addition to that, they would have made some investments. On that, they will earn income. Correct? Yes, sir. Same way, they would be incurring some expenses which is not related to product also. Will they record that? Yes. All the expenses and incomes would be recorded in the P&L account in financial books. Clear? Because of this, there will be a difference in profit tax. So I have also given here what are the main reasons why we will have a difference between costing profit and financial profit. Sir, what are those? One by one. Pure financial charges, pure financial income means these are the items which are recorded only in financial books, but not in costing books. But not in costing books. Let me read and explain. I have given few examples also. Listen this. Items shown only in financial accounts, we call it pure financial items. First one, pure financial charges means these are the expenses charged only in financial books. Examples: loss on sale of fixed assets and investments, expenses and discount on issue of shares or debenture, interest on bank loan, mortgages, debentures, etc. Damages payable, penalties and fines, goodwill or preliminary expenses written off, income tax, donations, subscriptions, dividend paid or proposed, transferred to reserves and sinking fund. Guys, if you observe, all these are the expenses which we will record only in which books? In which books? Financial books. And it is an expenses. It is an expenses. Because of this, my financial profit will go up or go down? Go down. Whereas my costing profit, I have not at all recorded these items. So my costing profit would be same. There is no change in it. There is no change in it. Hope you're getting it. Okay, let me explain this. Yeah. Now, listen, guys. This is financial record. This is costing records. For costing records, normally you prepare cost sheet and all, but I have taken it in the form of income statement. Let us take it as costing P&L. Listen. There is a financial income which we have recorded in financial book, 10,000. Okay, or else let me start with financial expenses because that is what we have just now covered. There is a financial expenses of 5,000 which I have recorded in financial books. Whereas I have not recorded this in my, I have not recorded this in my costs. Clear? So because of this item, let us analyze individually. Because of this item, my financial profit has gone down. Whereas my costing profit is same. Why, sir? Because I have not recorded this transaction. Clear? Now assume guys, we are doing the reconciliation. See, while doing reconciliation, either of the profit we will take it as a base. Either of the profit we will take it as a base. Means either costing profit or financial profit. Clear? Now if I take the financial profit as a base, I need to show what is the other one. In between, I need to show plus or minus. That plus or minus is nothing but the differences or the reasons for the difference. Clear? Yes. Now assume my starting point is financial profit. My financial profit has already increased or decreased? It has come down. Now, if I have to match it with my costing profit, what should I do, guys? I need to add it. Because if I have debited only in financial book, my financial profit has come down, whereas my costing profit is same. My starting point is financial profit, which has already gone down. What should I do? Lift it up. Lift it up means what should I do? Add. Add how much? 5,000. Next. Sir, what if my costing profit is a starting point? Either of the two you will do, guys, not both. But I'm just explaining both because you should know both the ways. Now, sir, what if I'm starting with costing profit? Simple. Now, my costing profit has not changed because of this. So, guys, whenever you are taking any profit as a base, any changes, you have to make it for that term. Any changes, you have to make it for that. Yeah, yes. Now, my financial profit has already gone down by 5,000. Whereas my costing profit is same. Now my starting point is costing profit. Any adjustments I can make is for what? Costing profit. So what should I do? Bring it down. Bring it down. How do you do it? Deduct 5,000. Deduct 5,000. Got it? Just so. Next. Pure financial income means these are the incomes which are recorded only in financial books. Because of this, my financial profit has gone up, whereas my costing profit is same. No change. What are those examples? Rent receivable, profit made on sale of investments, fixed assets, etc. Transfer fees received, interest dividends received, on income received on investments. That is, you would have invested in shares for which you get dividend, or you would have invested in a bonds or debenture for which you get interest, or even if you would have kept FD or any deposit for which you earn interest. These incomes are recorded only in financial books, guys. Next, brokerage received, discount, commission, etc. received. See, some of this can also be payments. For example, interest paid. It will be pure financial charges. Clear? Or sir, what if I am paying dividend for my shareholders? Then pure financial charges. If I receive income, if I pay expenses. Clear? Let me explain this with an example. Guys, assume there is a financial income of 10,000, which I have recorded only in financial books. Because of this, my financial profit has gone up. But have I recorded this in my cost books? No. So there is no change in my costing profit. There is no change in my costing profit. Now, because of this, there is a difference in profits. Yes, sir. How do I reconcile it? Assume my starting point is financial profit. My financial profit has already gone up. Now, how do I match it with costing profit? Deduct this. So deduct 10,000. Deduct 10,000. Same way. Same way. Sir, my costing profit is a starting point. There is no change in my costing profit, but my financial profit has already gone up. If I have to match my costing profit with financial profit, what should I do? Add 10,000. Add 10,000. Is that clear? Yes. Next. Items included only in cost accounts means especially the notional items like notional rent, notional salary, notional interest. These are the items which are recorded only in cost books but not in financial books. Will that also lead to differences? Yes. Then adoption of different basis of valuation of stock. For example, sir, for costing I am following FIFO, whereas in my financial books I am following weighted average. So in that case, will we have a difference in the closing stock value? Yes. When we have a difference in closing stock value, guys, automatically it will have an impact on profit. Yeah, same way. Different methods of charging depreciation. For example, sir, in costing, we are following WDV method, whereas in accounts, we are following SLM. Will the amount of depreciation be different? Yes. And will it affect my profits? Yes. Yeah. Let me give some examples. Listen. Let me just erase all this. Listen. Assume there is an expenses which is recorded here as 20,000, whereas in cost books we have recorded only 50,000. 50. We call it as under absorption in cost books. Under absorption in cost books or under recorded. Now listen. Sir, because of this, my financial profit has gone down by 20,000, whereas my costing profit has gone down by only 15,000. So here plus is how much? 5,000. Plus down is 5,000. Correct. I mean extra debit is 5,000 in simple account. Extra debit is 5,000. Now, if I am starting with financial profit, my financial profit has already gone down further by excess how much? 5,000. Now, if I have to match it with my cost profit, what should I do? Add 5,000. Add 5,000. Got it? The same way. If my starting point is cost profit, sir, my cost profit has gone down by only 15, whereas my financial profit has gone down by 20. So 5,000 less I have charged in cost books. So what should I do now? Charge another 5. Charge another. Deduct it. Got it? Yes. Next, let me take one more item. Sir, I will change now. This is 20, but this is 25. 25. So because of this, here we have debited 25. My costing profit has gone down by 25, but financial profit only by 20. So extra debit of how much here? 5,000. What should I do? Guys, financial profit. Financial profit is a starting point. Any adjustments I can make is for financial profit. Now, my financial profit has gone down only by 20,000, whereas my financial costing profit 25. So I should reduce another 5,000. Another 5,000. Same way. Costing profits are already excess debit of 5,000. Already my profit has come down excess by 5,000. So what should you do now? Add 5,000. Add 5,000. Hope you're understanding. Each item analyzed from the profit angle, guys. Is it increasing your profit or decreasing your profit? But one thing you keep in mind, any adjustments you can make is for what? Starting point. Assume, guys, listen. Assume your starting point is costing profit. There is a mistake committed in financial books. What should you do now? Give adjustment for that mistake here also. Clear, add or deduct it. Hope you understood. You cannot see, we are not going and doing any changes in the books, guys. Books are already closed. We found out that there is a difference in profits for which we are preparing a separate statement. Separate statement doesn't mean that we are going and correcting all the things in the books. No, we are not doing any alteration in the books. We are not rectifying the errors. Clear, a rectification of errors you learned it in accounts, na? We are not doing that here. What are we doing, sir? Sir, books are already closed. We have got so and so profit in each book. There is a difference. We are trying to analyze what is the reason for it. That reason is presented in this statement. See, there is assume there is a profit difference of 25,000. That 25,000 difference is for what reason? I am giving a separate statement for you. Separate statement for you, because some students might get confused with rectification of errors. Oh, we are doing all this rectification or correction in books. No, books are already closed. Hope you are getting it. Yeah, yes. Now, let me come to the income side. Let me come to the income side. Assume, guys, there is one income recorded here, 50,000. Whereas in my costing books, I have recorded only 30,000. Okay. So because of this, my financial profit has gone by 50,000, gone up to by 50,000. Whereas costing profit, only 30,000. So here extra how much, sir? 20,000. Extra credited. That means profit has increased by 20,000. If my financial profit is a starting point, what should you do? Deduct 20. Already it has gone up now. Bring it down to match with costing profit. Now, if my costing profit is a starting point, sir, my financial profit has already gone up. My costing is 20,000 less. If I have to match it with financial profit, what should I do? Add. So add 20. Add 20. Now let me take vice versa. So I'm making it 70. So here profit has gone up by 70, but here only by 50. So in costing, extra how much, sir? 20,000. So my costing profit is overstated by 20,000. So if my financial profit is a starting point, sir, it is understated. If I have to match it with the costing profit, what should I do? Add 20,000. If I start with costing profit, it is already overstated, sir. How will I match it with financial profit? Deduct it. Deduct it. Clear? So this is what you have to do, guys. Clear? First, decide what should be your base. Either financial profit or costing profit. If they have given both in the question, it is your choice. If they have given any one profit, obviously you have to take that one. Or else sometimes they will give instruction in the question. Prepare a reconciliation statement by taking costing profit as a base. Or by starting with costing profit. You have to start with it. Even though they have given another profit, please don't start with that. Oh, sure. Coming back. So reconciliation can be done in two ways, guys. One is through reconciliation statement, whichever I showed you now. We will take one profit as a base, add few items, deduct few items, and at the end we will get the profit as per the others. Another one is through memorandum reconciliation. Memorandum reconciliation. Okay. First, you can see through reconciliation statement. Sir, what do? We take one profit as a base. I have given here cost profits. If I take cost profit as a base, I have given all the items which you need to add and all the items which you need to deduct. You need to mug up all this, no? Nothing to mug up. I have just given here for your reference. Clear? As I told you, I just took few examples and I explained, same way you analyze this. Because of this item, my base profit means with which you are starting. Is it increased or decreased? If I have to match it with the another profit, what should I do? Add or deduct? Accordingly decide. Clear? Guys, it is just a plus minus game, but just take time and think. If required, you can do rough working like this. Okay, just put a rough cost records and financial records and see. Okay, because of this, what has happened, plus, minus, and all, analyze it. Or else, if you can just analyze it in the mind also, do it. Try to do it as early as possible, but don't commit a mistake in a hurry. Okay, because Instead of plus, if you do minus also, waste. Clear? And if at all, if you get this kind of question in the exam, you how to capitalize, guys. Okay, don't lose even half marks. Because plus minus and all, you should be punter. This is with respect to statement. Sir, what if by chance if I start with financial profit? What if I start with financial profit? Then whatever should be added will come as deduction, and whatever you have deducted will come as addition. Clear? Yes. Next. Sir, what if you are drawing memorandum reconciliation account? If they ask you to draw it, only you do it. If not, try to always reconcile through statement. Sir, what is this memorandum reconciliation account? Guys, here don't worry about double entry system and all. Sir, if I have debited here, where will I credit? If I have credited here, where will I debit, credit and all? Don't worry about it. Clear? Yes. So simple. If the starting point is a profit, start it on the credit side. Whatever you are supposed to add, show it on the credit side. Whatever you are supposed to deduct, show it on the debit side. At the end, the balancing figure would be profit as per the other. Profit as per the other. I repeat, you will start with profit, whichever profit, show it on the credit side. Start with that. Whatever you have to add on the credit side, whatever you have to deduct on the debit side. At the end, balancing figure would be the profit as per the other books. Sir, what if by chance if debit side is more, then you will have loss as per the other book on the credits. Yeah. Sir, what if starting point itself is a loss? Then you have to show it on this side. Loss as per the respective. Loss as per the respective book, guys. And even in the statement, guys, if at all, if the starting point is the loss, don't get confused. Just put this in bracket. That's all. And when you are analyzing whether to add an item or deduct an item, please analyze from profit point of view. If you start analyzing from loss point of view, it will confuse you. It will confuse you. Analyze from profit point of view. Means because of this item, my profit has increased or decreased. Accordingly, decide whether to add or deduct. But one change is you put the starting point in the bracket. When is this? When the starting point is a loss. Okay. Done with this, yes. Sure. One more important thing with respect to non-integrated. Guys, with respect to non-integrated accounting system, we discussed the journal entry, ledger, everything. No? Yes. I will try to connect it to the cost sheet format. I will try to connect it to the cost sheet format. The last part. Interesting. Pay attention. So let us just go through. Cost sheet we already covered. Cost sheet format is this. Here, just have a look into it. If they ask you to prepare cost sheet, this is what you have to do. No change in this. I'm not compromising with this. Clear? Yes. But now, when we are doing cost accounting system, guys, we are following the same sequence to pass journal entry and prepare ledger accounts. But few changes are, these things will not come, guys. These things and all will not come. Okay. These things they are not covered in cost accounting systems. Clear? And administrative overhead will always come after cost of production. Will always come after cost of production. Here we will see whether it is related to production, general and all. There you consider it as general. There you consider it as general. Hope you are getting it. Clear? Now let me connect it to the cost accounting system. Same thing. Cost sheet and cost accounting system I am trying to connect. Please pay attention. Through this. So this is the format for cost accounting system with minor changes. With minor changes. What are those? First, only focus on this side. This side. Okay. Direct material plus direct wages plus if at all if there is any other direct expenses. What is it? Prime cost. Then plus factory overhead absorbed plus opening WAP closing minus closing WAP will give you what? COP. There it was factory cost, correct? But here straight away COP. Cost of production or cost of goods manufactured. Then administrative overhead absorbed plus opening stock of finished goods minus closing stock of finished goods will give you what? COGS. Plus selling and distribution overhead absorbed will give you cost of sales. Will give you cost of sales. Okay. This is the format for cost accounting system with some changes. Almost same like cost sheet with some changes. Clear? Especially at this point, there are few changes. That is, I told you quality inspection, that this and all will not come here. Okay. Now let me try to connect it to the accounts. Guys, direct material You would have transferred from where to where? Stores ledger to WAP. So it is sitting where? In WAP control account. Then direct wages also you will transfer from which account to which account? Wages control to WAP control. Then direct expenses, if at all if it is there, straight away you would record it in WAP control account. Okay, that is WAP control to general ledger. You straight away record it, if at all if it is given in the question. Most of the time they don't give. Oh. Now all these things are sitting where? In WAP control account. Correct now people? See how beautifully I am trying to explain. You have to understand where is our WAP. Direct material, direct wages, plus if there is any direct expenses. Clear? Then opening stock of WAP minus closing stock of WAP plus factory overhead observed will give us what? COP. Will give us COP. Now observe. Direct material, direct wages, direct expenses plus factory overhead observed plus opening WAP minus closing WAP. Minus closing WAP on the credit side. All other items are on the debit side. Closing WAP is on the credit side. Means minus only, no? Yes. So what is that figure called? Cost of production. Cost of production. Hope you are getting it. Clear? Yes. So once we get cost of production, we are at this stage now. Cost of production, where do we calculate? In WAP control account. We will transfer from WAP control to which account? Finished goods control. But the name of that amount is what, guys? Cost of production. Next, administrative overhead observed. Opening stock of finished goods minus closing stock of finished goods will give us what? COGS. Observe. In finished goods control account. Let us go to finished goods. They will receive cost of production plus administrative overhead observed will come here plus opening stock of finished goods minus closing stock of finished goods. What do you get? COGS. Where are you transferring it to? Cost of sales. Observe. Cost of production we transferred for WAP to finished goods. Then administrative overhead observed also. We transferred from administrative overhead to the finished goods control account. Then opening stock is there on the debit side of finished goods control account. Like what? To balance brought down. Then closing stock of finished goods is on the credit side of finished goods control, like as what? By balance carried on. After taking all this into consideration, what are we getting? COGS. We are transferring this from where to where? Finished goods control to cost of sales account. Finished goods control to cost of sales account. Okay, sir. Then selling and distribution observed. We will transfer from selling and distribution overhead to cost of sales. At the end, what do we get, sir? Cost of sales. We will transfer cost of sales to which account? Sales account. To sales account and record the sales there. Correct. If you want, you can also show another two steps. Less profit is equal to sales. Clear? Yes. If you observe cost of sales also, you can see they will receive cost of goods sold from which account? Finished goods control account. Plus selling and distribution overhead absorbed. We will get what? Cost of sales. Where do we transfer it to? Sales account, or straight away you can transfer it to costing P&L account also. Clear? Yes. So this is all about the cost accounting system chapter, guys. If you want, you can just have a look into this. Okay. This is I have drafted in order to connect cost accounting system with cost sheet format. Yeah, and whatever is the changes, you just make a note of that also if required. For example, here overhead will all that is administrative overhead will always be general, which will come after cost of production. Clear? And all the items of cost sheet will not come here, guys. Like quality inspection, primary packing, secondary packing, those things and all might not come here. Got it? Yes, sir.